Welcome to our comprehensive XAUUSD market analysis report, covering October 6th through 11th, 2025. This week marked a historic moment in gold trading history as prices shattered the $4,000 barrier for the first time ever. In this presentation, we'll explore the technical and fundamental factors driving this unprecedented rally, examine key support and resistance levels, and provide actionable trading strategies for both short-term and medium-term horizons. Whether you're a seasoned trader or just starting your journey in precious metals markets, this analysis will equip you with the insights needed to navigate gold's current bull market. Let's dive into what made this week truly remarkable for gold investors worldwide. During the period of October 6th to 11th, 2025, gold achieved a historic milestone by breaking above the $4,000 psychological barrier, reaching an all-time high of $4,059 on October 8th. This remarkable performance represents the 8th consecutive weekly advance, marking a year-to-date gain exceeding 50%. The rally has been driven by multiple powerful factors: the Federal Reserve's dovish pivot with a 94.6% probability of a rate cut, the ongoing U.S. government shutdown creating significant political uncertainty, declining Treasury yields showing a negative 0.71 correlation with gold, and intensifying safe haven demand amid global geopolitical tensions. These converging forces have created an exceptionally bullish environment for precious metals. Let's examine the key statistics from this historic week. Gold opened on October 6th at $3,897 per ounce. Just 2 days later, on October 8th, it reached an all-time high of $4,059. The weekly gain was an impressive 8.5%, contributing to a remarkable year-to-date performance of 50 to 54%. This marks the 8th consecutive week of advances, demonstrating extraordinary momentum. What makes this milestone even more significant is the accelerating pace of the rally. Gold surpassed $4,000 less than 7 months after first breaking above $3,000 per ounce, highlighting the intensifying bullish pressure and strong institutional demand driving prices to unprecedented levels. From a technical perspective, gold's trend remains strongly bullish across all timeframes. Key resistance levels to watch include the $4,000 psychological barrier, the $4,056 bullish threshold, and the critical $4,844 to $4,113 zone, which represents a 100% extension target. Extended resistance sits at $4,308. On the support side, primary levels include $3,950 as key support, $3,900 as core trend support, and the 20-day moving average zone between $3,819 and $3,834. The $3,782 level provides additional support. Overall, the technical structure confirms a strongly bullish trend, with price holding firmly above all major moving averages. 6 fundamental factors are powering gold's historic rally. First, Federal Reserve policy expectations show a 94.6% probability of a 25 basis point rate cut at the October 29th meeting, with FOMC minutes confirming consensus for further easing. Second, Treasury yields are declining toward 4% with a strong negative 0.71 correlation to gold, evidenced by record September ETF inflows of 150 tons. Third, the U.S. government shutdown, the first in over 6 years, is creating political uncertainty, with key economic data suspended. Fourth, safe haven demand is intensifying as the Fear and Greed Index approaches the fear zone. Fifth, sticky inflation continues supporting gold's role as an inflation hedge. Finally, central banks are buying gold rapidly, now holding amounts equivalent to their U.S. Treasury bond holdings. Market sentiment remains overwhelmingly positive, with approximately 75% of analysts bullish, 20% neutral, and only 5% bearish. Expert insights from leading financial institutions reinforce this optimistic outlook. TradingView emphasizes prioritizing buying on dips and following the dominant bullish trend. Investing Live highlights how professional traders scale out at predefined levels with disciplined approaches. ActionForex notes that while the 7-week rally may be reaching a potential tipping point, the medium-term uptrend remains intact above key moving averages. Forex.com confirms bulls are in control with the 8th consecutive weekly advance and weekly momentum at its highest level since August 2019. DailyForex reports Morgan Stanley's bullish forecast, naming gold their top commodity pick with a $4,400 target for next year. For short-term trading over the next 1 to 2 weeks, look for pullbacks to the $39.50 to $39.85 support zone as entry points. Target $4,000 initially, then $40.56 with extended targets at $40.84 to $41.13. Place stop losses below $39.50 and limit risk to 2 to 3% per trade. The expected short-term range is $3,900 to $4,100. For medium-term positions spanning 1 to 3 months, maintain core long positions and add on dips to key support levels at $39.50, $3,900, and $37.82. Target the $4,100 to $4,200 range with extended targets at $43.08 and $45.83. Implement trailing stops to protect profits. The expected midterm range is $3,700 to $4,300. Gold's performance during October 6th through 11th has been truly historic, breaking above $4,000 and reaching an all-time high of $4,059. This rally has been supported by a powerful combination of Federal Reserve rate cut expectations at 94.6% probability, declining Treasury yields, U.S. government shutdown uncertainty, and robust safe haven demand. While technical indicators suggest short-term consolidation is likely, the overall trend remains firmly bullish. Key takeaways: maintain a positive bias toward gold. Focus on buying opportunities during retracements. Recognize the $3,900 to $3,950 zone as key support. Target the $4,100 to $4,300 range in the medium term and implement proper risk management with trailing stops. The combination of favorable monetary policy and global uncertainties suggests gold's bull market has further room to run.